This is Chanel Bunger with the Becker Private Equity and Business Podcast, and today I'm excited to speak with Matt Wolf of RSM, who joins us weekly to share an update on economic trends that he's keeping an eye on. Matt, thank you as always for joining me today. Why don't you take it away and tell us about some of the things that you're seeing out there?
Yeah, thanks, Chanel. The deal flow, deal environment can sort of be characterized as cautiously optimistic. I think we're seeing exits from long-held positions via continuation fund or just straight up sell as sponsors reorient themselves to deploy capital, kind of the long march to reorienting some of their fund vintages into this new credit cycle, as we've talked about, periodically on this podcast. We're seeing that happen slowly at first, but we'll get through all of that, and that means in one way deals are happening. We're also seeing other companies sort of come to market, which is encouraging. I think we continue to see positive economic data, at least from a sort of GDP growth and inflation perspective, certainly positive, right? The disinflation is continuing. We're set to have good, solid, maybe not outstanding, but solid growth, and still sort of base case estimate of an economic soft landing. All of these are to the good when it comes to the deal flow environment. I guess one sort of counterpoint there is, a lot of market participants were still holding out hope for a March or even potentially a May rate cut. We still think it's probably June based on the data that's been released so far, but of course we'll continue to monitor that. I think most everybody now understands or believes that March is strictly off the table, and perhaps May at the earliest. We're still in the June camp, but there's a lot of time between now and those rate decisions. But there's not a lot to be pessimistic about, right? I think we're not. 2024 isn't going to shape up to be another 2021 or Q1 of 2022, right? When deal flow was just happening at a rapid, perhaps too fast pace. But we'll have another solid year, it looks like, based on the first month and a half of activity. Should expect a solid year like we had in 2017, 2018, 2019 across most industries. So that's optimistic. I guess the other point I'll touch on a little bit too in this sort of quick update is, yes, it's an election year. We get a lot of questions. Well, what does this mean for that outlook? Or your take on, if so-and-so wins, how is that going to affect anything? And, these sort of cyclical changes, I'm cautious against reading too much into them. First of all, it's nothing that we can really directly control. And to the extent we need to plan for it, I don't know that we necessarily do, right? I understand why people are thinking about it. It's already begun to dominate the news cycle, but ultimately, there's a lot of opportunity to create value irrespective of sort of the political environment. And it's not something that most investors, most executives really need to worry about as we go about our daily lives and our businesses, I don't think. So in a nutshell, that's what we're looking at this week.
Perfect. Well, Matt, thank you as always for joining me today on the Becker Private Equity and Business Podcast and for always keeping us updated on these things. Thank you.
Thank you.